Good evening, ladies and gentlemen. Welcome to the 24th Outright Financial Matters series for a 1-hour conversation. And as you all are aware, the post-COVID-19 business landscape continues to evolve with unexpected risks and challenges to businesses, stakeholders' expectations, climate change implications on business performance, ongoing wars, ever-increasing population in Africa and other parts of the world. Today, Outright Financial Matters series brings to you a very important topic: taxation, audit, and compliance requirements for businesses. And to help us navigate this conversation is a gentleman, a professional who needs no introduction. A man with many letters to his name, Mr. Paul Mugerwa, a financial economist and a member to several professional bodies. Someone who is known and recognized for his contribution as a resource person to financial industry in Africa and beyond. Paul, you're most welcome.
Thank you, Doctor. I'm exceedingly humbled by the generosity that you're using to describe me. How I wish the good Lord gives me the grace to be that. But thank you. I'm really humbled, sir.
In the audience, we have investors, regulators, auditors, consultants, experts in tax matters, board members, chief executive officers, and accounting students, and other stakeholders, academicians. Ladies and gentlemen, from where you are most welcome to this interesting conversation on this 29th day of April, 2026. Paul.
Yes, Doctor.
And icebreaker. What is you're a very busy gentleman? Traveling
Sorry,
from time to time, having meetings one after the other. What does your typical day looks like?
Well, thank you, Doctor. My typical day is simple. It begins as a Christian with a Christian husband and father. I begin with a fellowship with my wife and children, which is a devotional, which normally would be anywhere between 6:30 or somewhere there. Then I rush to do various engagements. I call myself a professional hustler because I juggle many things. Profession, I'm a coffee farmer. I'm a spiritual therapist because I also do ministry. So my day has a couple of things, to say the least. It is not structured, but God helps me to achieve all that I have to, because I don't do an 8 to 5 job. So I do many things in just a day, but it's not really structured, but certainly I do everything within, I would say, 14 to 15 hours, because I fully use my day. I use around 14, 15 hours. Thank you.
Ladies and gentlemen, for those who are just joining us, taxation, audit, and compliance requirements for businesses. And to navigate this session is Robinson Isaac Ogwang, and the panelist is Paul Mugerwa, a financial economist with a lot of knowledge and interest in ESG. So today, we listen to him how to make numbers work for business. Paul.
Yes, doctor.
Compliance. Requirements for businesses.
Yeah.
As a young man growing up, when did you meet the word compliance?
Well, I first met this animal compliance when actually I was at tax school. My background, I began as an economist, then later became a financial economist, basically investment management. So when I was dealing with the professional investment space, that's when I came to learn about compliance, because both from the wealth management point of view or from an investment management point of view, there is a legal framework, there are regulatory environment that we have to work along with, some of which are domestic, regional, and global. So later on, when I went to tax school, I also I was introduced to an animal called taxation and fiscal policy. So all that would help me to deeply understand. Now going to sustainability, that is emerging as a very important compliance issue within the financial services industry. So it has seen me grow in this space, but in different, I would say, in different areas, but all within the financial services industry. So that is the least I can say, Doctor.
Wonderful. Paul.
Yes, Doctor.
Today is 2026. There are issues related to taxation.
Yeah.
From the domestic point of view, I want to give you an open check. A businessman an innovator would want to navigate and go beyond the stress zone. What should one consider in business planning as far as taxation is concerned?
Doctor, for fear of diluting what I'm going to share, when I was at tax school, I was told one thing, and some of these things I'm going to share them, that the government is in the business of of taxing. And that is actually what gives it the mandate. When you understand that, that gives you peace. And that reminds me of a very proverbial prayer, a Catholic prayer, that God give me the serenity to know things I can change, and the courage to know things I can't change and live with them, and the wisdom. So there are some things which you can't change, and the best thing you can do is to align yourself. So with an innovator, with a hustler or whoever, the tax system is real. And I was actually told that in the developed world, even before someone gets a medical professional or a medical assistant, a medical doctor, the first thing they get is a tax advisor. Because in developed financial systems where there are no loopholes, almost even breathing is taxable. Your choice to give a donation, to give a tithe, to give whatever, all those are taxable activities. So that's why in those jurisdictions, tax is very important. And it's soon closing in even here, that everything that you do, it has a tax implication. So it is only prudent that you make yourself, that you help yourself understand it, but above all, to get someone who will help you to navigate, because certainly you can't do this. Why? Taxation has the law, taxation has the accounting, taxation has the fiscal, so it has the policy. So in short, one of the things that any business would need is to get a tax advisor, because that will go a long way in helping you to not only to survive, but to thrive and to be competitive.
So what do you look for? What should a business executive look for in 2026 going forward, given that background?
There are a couple of things, and in the presentation, I'm going to share some of course, the tax proposals, which have a lot of implication for any kind of business. I think I'll comprehensively share that. But also, we need to be alive that what inspires all that is the fiscal space. Whenever the fiscal space of a country is narrowing, yet it has ambitious growth, ambitious plans, then definitely the first point of recourse is the tax system. And so, as we're going to see, with the tenfold growth, it has a lot of implication for the macroeconomics of Uganda, but also for a small business. So those things are very important, and I think I'll be able to highlight some of the implications and how we can navigate them when I come to that point, Doctor.
Okay. In the case of legislative changes and the tax strategy 2026 context, what are the most critical or immediate adjustments that businesses must make in their 2026 tax planning? And if anything, audit preparedness and risk management as tax authorities adapt advanced AI-driven analytics? What should firms prioritize to ensure audit readiness in 2026?
That's very okay. Doctor, as I said, that those are some of the things that inspired me when I was preparing my presentation. Issues to do with what do we have ahead of us in terms of tax, what is the criticality of audit, what is the, why is compliance imperative, and how can they help us not only to survive, but also for capital raising. I come from an investment banking background, whereby I primarily view everything from a capital raising point of view, that to what extent should this help me to raise capital and to manage my, my finances. So all those issues, I think I'm going to be able to talk about them to help the SME owner, to help an SME manager to deeply understand, but also of course, I'm also going to talk about this from the lenses of a capital provider or investors, because as you said, that our audience has a mixed bag. It has investors, it has financial institutions or capital providers, it has policy people. I'll also talk about the lenses through which they also see issues to do with taxation, with audit, and compliancy. So simply put, my discussion is going to be based on the perspective of this one, that in the face of this, what are the lenses through which an SME owner views these new tax proposals, views the general tax system. But it would all begin by understanding the tax system, because as I'll break down, what we begin with is the tax system. And the tax system, as I'll explain, it's broken down into 3 tax systems, and understanding where Uganda lies and its implication is quite important.
So, Paul, please split the atom. Give your presentations so that we can have stakeholders to come in to make contributions, to ask questions.
Thank you, Doctor. Thank you, Doctor. Please confirm that you can see my screen. Please confirm that you can see my screen.
Yes, please, it is clear.
Beautiful,
you can go ahead and make your presentation.
Good. Doctor, do I need to leave my camera on, or I can switch it on, off?
You can put off, no problem.
Okay, beautiful, beautiful. Thank you, thank you. So thank you, Doctor, for that kind introduction. And sorry. What has happened? Sorry, allow me. I don't know whether. Please allow me fix this. Can you still see my screen?
Okay. Yes, please, is seen. You can go ahead and make your presentation.
Great. Thank you. So thank you, Doctor. As my dear participants, viewers, whichever terminology that can be used, I'm glad that I've been honored with that opportunity to come and interact with you. As earlier mentioned, my name is Mugerwa, and we're going to talk about taxation, audit and compliance requirements for businesses, navigating the landscape for growth and sustainability. And certainly that gives a high-level summary of who I am, a financial economist, just like Doctor mentioned, but what he didn't mention is that I'm a full-time husband and a full-time dad and a coffee farmer. So that is very important. Speaking about that, I think I need to make it clear the objectives of our discussion. One is to demystify the taxation, audit, and compliance landscape in Uganda, to demonstrate how adherence supports business competitiveness, which is very critical, but also investment attraction, because as someone from an investment background, that speaks, that is very important for me. Everything that I do should be able to attract, should be able to attract investment into a business, but also create investment opportunities for my investors and economic sustainability, but also to equip stakeholders with practical insights and which would help them to make an informed decision. Doctor, before I begin anything, I wanted to begin with these very important, famous and memorable quotes, because they would help us to get deeper insights into taxation, compliance, and audit. And these were made by very pronounced guys. Some of them were presidents, some of them were economists, celebrated economists. So they are quite important for us to appreciate. Beginning with Benjamin Franklin on taxation, he said that in this world, nothing is certain, but death and taxes. Very important. So you can play around with anything, but you can't escape death, just like you can't escape tax. Because when you understand the fundamentals of tax, that's when you can appreciate that you can't escape it. That is Benjamin Franklin. Then Albert Einstein, a pronounced scientist, said that the hardest thing in the world to understand is income tax. Very important. It is the hardest, because ever since it was introduced up to now, you can't understand it. Why? Because this is one of the laws that are very dynamic. Every year it has to change. That's why I said that tax, it begins with the law, and the law changes every now and then based on the revenue aspirations of a jurisdiction. So that's why Albert Einstein said that. Then John Maynard Keynes, the father of the Keynesian theory and philosophy of economics, he said that the avoidance of taxes is the only intellectual pursuit that carries reward. And that's why in taxation, we separate between tax evasion and tax avoidance. Tax avoidance, once it's not to the extreme, is legal. And when I was at tax school, I was trained that the way how the tax code is designed, the first section taxes, and normally the second or the following section gives you a tax relief. but you can only understand that if you understand tax laws. So that is what John Maynard Keynes said. Then Benjamin Franklin still says that the power of taxing people and their property is essential to the very existence of government. That's why in at tax school, of course, we had a statement that the government is allowed even to break international laws as long as it is saving a tax loss. I want you to understand that the government is even allowed to break international laws as long as it is saving a tax loss. What does it mean? That taxation is at the heart of government. Then, of course, Winston Churchill, the guy actually who named Uganda the Pearl of Africa, one-time Prime Minister of the UK, he said that for a nation to try to tax itself into prosperity is like a man standing in a bucket and trying to lift himself up by the handle. Very important to the policy people, that if we tax people to their bones, that will not move the country. But we need to come up with very innovative ways of raising revenue. Then in terms of compliance, which definitely leads to sustainability, Paul Koziars said that managing compliance takes resources, but it's nowhere near as expensive as the cost associated with a breach, because that is a very ugly place to be. That's why compliance is the best approach. Then Heinrich Van Loon Smith Jr. said that regulatory compliance is critical to managing risk, keeping business sustainable, and protecting reputation, because one of the most important elements that a business needs is reputation. That's why reputational risk is a very ugly place. Then Mutauka Imasiku Kazoka said non-compliance anywhere is a threat to internal controls everywhere. Of course, blowing the importance of compliance. Then, of course, in terms of audit, which is about integrity, Lord Justice Lopez said auditing is the watchdog of the business world. Of course, you can say that if you dismiss it from what happened to the Enron and the WorldCom cases, which was a very ugly place whereby everyone began questioning the role of auditors. Where were they? Did they also connive? Very important discussions. Then Ronald Reagan said that in auditing, we trust, just like we need to trust, but we have to verify. And then David Cottrell said, audit is not an event, it's a mindset. What am I trying to say? That these quotes are very important, that even if you forget anything, but you get the depth, the depth of these quotes, it will go a long way in helping you to understand how important tax compliance and other regulatory compliance is very important, and how critical audit is. Then finally, Charles Tiefa said that an audit is not just a process, it's a commitment to integrity and transparency. So these quotes are very important. They've, of course, they've stood the test of time. And maybe one other thing I would like to mention before I go deeper into the discussion, because there is already the discussion of why we pay our taxes and we don't get commensurate services and all that. I would like to remind, I'm using the word remind carefully. I would like to remind my participants that the way how the tax law was created, or the tax system was created, is that taxation is compulsory. That is one. Compulsory is not good enough, but it is a non-quid pro quo financial obligation. Non-quid pro quo, of course, coming from Latin, means that you don't expect a commensurate service. I've had discussions with my colleagues, and they are arguing, they want to say that, but that's not fair. But that is how this thing was designed. So when you pay your tax, which is an obligation, you don't really expect government to give you commensurate service. But in a prudent environment, that would be good. That would be good. And it would be incumbent upon the government to do that. But you can't have a claim. That is how the tax system was designed. So this, as I said, that it's a non-quid pro quo financial obligation imposed by governments on citizens and businesses to fund public services, infrastructure, and social programs. But you can't take the government to court and claim. So that is very important. Anyhow, let's try to get the context. Let's try to get the context, because everything we can appreciate it within the broader context of Uganda, its fiscal landscape, and also the global. So Uganda's economy, of course, has historically grown at an average of 4.5% annually over the years before the pandemic. And of course, the pandemic had its issues, but now we are recovering. And the good thing is that Uganda's economy is projected to rebound and grow by 7.5% in 2026. That is very good news. Why? Because Uganda in Africa, it is, according to this projection, it is taken to be the third fastest growing economy in Africa, only behind Ethiopia, which will be 9.2%, and Guinea, which will be 8.7%. What does that mean? All that has to be fueled by revenues. So I want us to get the perspective. So that's why Uganda's evolving. We need to understand Uganda's evolving fiscal landscape. Uganda, from this year, of course, we began the NDP4 that began in financial year 2025-26 to 2029-30, which focuses on an aggressive revenue mobilization to support the 10-fold growth strategy, which is now the mouthpiece of every policymaker, basically within the financial system. Of course, this is targeting an additional 4.8 trillion in tax revenue, mark that word, for just 2026-2027 financial year. So those volumes are expected to be collected. That's why little wonder that this will have an implication to your business. So the plan, of course, aims to support the 10.4% economic growth rate that Uganda would like to achieve by 2028-2029 through enhanced demand, domestic demand, and structural transformation. Of course, plus 15% of GDP to be mobilized through taxes. That is the target. But as we speak now, the revenue to GDP ratio remains below, around 13%, of course, which indicates room according to the projections. So those are very important elements to consider, and they inspire the different mechanisms that the government is coming up with to mobilize resources so as to achieve the 10-fold growth strategy. So Uganda's participation, we can't also dismiss the fact that we are into a regional integration. Uganda's participation in regional economic bloc influences our tax policies, trade, and compliance frameworks. Thus, there is an important role of compliance in fostering transparency and sustainable economies. So to deepen our discussion on this, we need to appreciate what a tax system is, because a tax system will influence the structure of our taxes, among other things. So globally, there are three important tax systems. There is the global tax system, which is called the worldwide, whereby residents are taxed on income and both both in Uganda and outside the country. So I want us to understand this. You're taxed both on what you earn within Uganda and outside the country, typically with mechanisms to relieve double taxation. That's why governments normally sign the double tax agreement or double tax treaties. That is the global tax system. Then the second one is the territorial tax system. And this tax, with this, taxation is only applied to income and within the country's borders, regardless of the residence of the taxpayer. So whether you're a resident or non-resident, because that is the classification for tax purposes, as long as the income is earned within Uganda's border, then of course, now that is what they call the territorial tax system. The other one, I said, is the global tax system, and now the second one is the territorial tax system, and the third one is the mixed or the schedular system, which is a combination where different types of, while non-residents are only taxed on incomes derived within Uganda. So while Uganda has a 30% standard for corporation tax, it uses a mix of indirect taxes, as we're going to see, them, value-added tax, excise duty, and direct incomes. Simply put, Uganda follows a global stock residence-based system that incorporates elements of the schedular tax system on different income types. This brings us to a very important discussion, and that is the different tax heads. The different tax heads. So we have the types of taxes, beginning with the income tax, which is governed by the Income Tax Act. Here we're talking about this is levied on individuals and corporate. Please mark this. Our discussion is on businesses, that is corporate, not individual. So this is levied on corporate chargeable income. I learned something very important at tax school, that our tax system doesn't tax profit. It tax chargeable income. And chargeable income is derived when all the deductions have been put aside. Then what remains is the chargeable income. So now for income tax, for corporation tax, it is charged. It is levied on chargeable income, and the corporation tax rate, of course, is currently at 30%. SMEs with annual turnover below 150 million may qualify for a tax relief. But of course, the beauty with our tax system is that there are not capital gains tax on transactions of equity instruments, that is share. When you sell your shares, that income is not taxed, which is called capital gain. And of course, then the second one is the value-added tax, which is 18% standard rate applicable on goods and services, with exemptions for essential items like food, like maize flour, like medicine, among others. Because if you could add it on, it would render the service to be very expensive, and it would take away people's livelihood or people's capacity to survive. That's why. So those are the lenses through which the fiscal policy analysts view issues. The other one, of course, is the excise duty. Excise duty, of course, this is a tax. This is taxed on issues on items like alcohol, tobacco, petroleum products, and of course, excise. There is an excise duty on bottled beer, which is a whole 800 per liter, 800 shillings per liter. Then, of course, we'll talk about the withholding tax. And withholding tax, we're talking about a tax. Withholding is actually a mechanism, but the real tax would be income, because they are levying a tax on something. But the mechanism is what is called withholding, though some people confuse it as being a special tax. But this is levied. There is a 6% on dividends, and there is a 15% on interest payments. There is a 6% on professional fees, consultants, like what we do. There is a 6% that should be withheld at source. Of course, there are many things like the market fees, property rates, trade licenses. So now this forms the bulk of the structure of Uganda's tax system. Of course, we need to appreciate the key principles that underpin the tax system. One, tax compliance is a legal obligation, as I said. Two, contribution, it is a huge contribution to national development. So those are the key principles of that I can talk about right now. Then, of course, there have been a couple of recent developments within the tax system, introduction of the digital taxation, whereby e-commerce and digital services now attract a value-added tax, like online platforms. Talk about the Jumias, the Uber. They are now VAT registered, which wasn't the case some time back. Then, of course, the other element that would be important for the SMEs is the tax incentives. As I told you that basically the way how the tax code is designed is whenever there is a section that taxes, below there would be a section that gives you a relief. But the question is, how do you interpret it and how do you understand it? But besides that, of course, there are tax incentives in terms of special economic zones, because now the government is looking at boosting manufacturing, boosting employment, among other things, by establishing special economic zones, which offers tax holidays if you're operating within that economic zone. Take an example, Uganda Investment Authority has approved 15 special economic zone projects. Of course, it approved in 2015, and now they're establishing them one by one. So those will definitely, once you operate within that zone, then you'll get an opportunity of a couple of tax incentives, and you'd be good. Great. So that was on the tax system. I took a lot of time, but of course, I think it was important for us to understand it. Now, talking about audit and assurance, what do we need to appreciate? Of course, we need to appreciate the purpose and the importance. Audits, what do? They verify financial integrity. They build stakeholder trust. They enhance credibility. They help to detect fraud and errors, and they fulfill statutory obligation. One of my background is in anti-financial crime, and I've seen how this is playing out. Actually, one time I was in Abidjan. I think some 2 years, it could be 2 or 3 years back, talking to investors, and I was shocked when they talked about the prominence of Uganda and East Africa in cooking books. I was talking to the investment industry. So they said that they can never trust books that are prepared from this side. Why? Because normally they have a lot of creative accounting. I'm talking to investors, private equity firms, and venture capital, which would have interest in investing in some of our businesses. So that was bad. I felt so bad. But of course, as someone who is coming from a background of anti-financial crime, I do understand what they are talking about. And remember, when I was very active into investment banking, we would get issues. I would take a company, I'm selling this company to investors, and now they would undress the financials, and they would really show how this thing is creative accounting. For some entrepreneurs, you could sit with them, tell them that, you know what, this is where we're doing good, this is where we are weak. And then the entrepreneur would instruct the auditor that please go and change this and this in your face. So that is how bad the situation is. So when the other guys in Abidjan said it, I could deeply understand it. So now that's why I'm saying that the importance of audit is audits verify financial integrity. They build stakeholder trust, enhance credibility. They detect fraud and errors, but also they fulfill statutory obligations. So that's why the Institute of Certified Public Accountants mandates audits for any for companies which exceed, which have turnover in the north of 150 million annually. Why? Because they believe that then it is sizable enough to begin, to begin opening up and reflecting the true nature of their financials. Quickly going through some of the types of statutory audits. Of course, in Uganda, statutory audits are mandatory. These are mandatory annual reviews of financial records, and this is enshrined within the Companies Act, of course, 2012 amendment. Yet the internal audits are voluntary or regulatory reviews, which are focused on improving operational efficiency. Of course, when it comes to government agencies, it is mandatory, but when it comes to the private sector, it is voluntary. How I wish I had time, we would have gone deep into this. Then forensic audits are specialized investigations into fraud or legal disputes. So in short, this is triggered by suspicion. So trying to understand, and it involves a lot of forensic accounting to go to the depth of the economic events, how they are recorded, and whether they really there is no financial crime. So statutory audits ensure compliance with ICPAU standards. Internal audits enhance control, and forensic audits support legal prosecution, because then this would be used as evidence that is permissible in courts of laws. Okay, I would have gone deeper into those, but due to time, the current trends, of course, there is increasing adoption of digital audits using cloud-based accounting systems, and now with the advent of the disruptive technologies, that is blockchain, that is AI, among other things. Many things are now being, there is a lot of audit processes that actually are done digitally. Growing emphasis on forensic audits to combat tax evasion and fraud. Of course, given our tax system whereby it is voluntary disclosure, of course, this triggers a lot of forensic audits, especially post the COVID post-COVID economic recovery. Of course, a case in point is of 2021 audit of a manufacturing SME in Kampala that revealed unreported income of more than 200 million due to poor record keeping, leading to a tax adjustment of 50 million and penalties. This highlights the importance of compliance. So, ladies and gentlemen, here I was talking about audit and assurance and their criticality. Going to compliance. Going to compliancy. Of course, compliancy is general. Of course, complying with the obligation that comes from the laws and the regulations. But now, if you can zero it down to tax, but of course, compliance speaks about generally the laws and the obligations within a certain industry. In the banking industry, there are compliance requirements. The investment industry, the manufacturing, whatever. So each industry has its own set of laws and regulations which inspire compliance obligations. But now, just particularly talking about the tax, legal and regulatory obligations, of course, there are, one of them is filing returns monthly, that is VAT, quarterly, that is basically the employment income tax, so pay as you earn, but also annually, that is for the corporation tax, that is annual. Maintaining proper books of accounts is, of course, is a compliance issue, and ensuring that the supporting documents are there. And we're going to see why these are critical, but also the timely submission, because there are penalties and interest if that is not done. Of course, it is critical to know that there is an opportunity to use URA's e-filings system, which has increased compliance rates by 20% ever since it really took shape from 2020. Then, of course, there are challenges and opportunities. One of the challenges is limited awareness among SMEs, whereby only 30% of the SMEs are VAT registered. Yet some of them, they actually reach the threshold that is required for registration. Government's tax compliance campaigns, of course, should be boosted up, and they are aimed at increasing voluntary compliance, leveraging mobile money platforms like MTN, Uganda, Airtel for easy tax payments. When you make a survey across our neighbors here, Rwanda has significantly boosted its tax compliance because of the digital platforms, the mobile money. When you go to Tanzania, it is also doing so well. Of course, also Kenya, where it began from. But at least Kenya has done a lot. Tanzania has done a lot. Kenya, I think we are also catching up, but we still have a long way to match up with them. Supporting business compliance. Of course, here we're talking about establishing tax advisory desks at each URA offices. And if we have URA people here, they should also know that they should train their people into the tax code, because those people are greatly wanting in terms of the tax law. They normally enforce what they were told, not what the law says, which is a problem. It's a problem. I've had that from very many colleagues, and I believe that they should deliberately ensure that they deeply understand the tax laws, among other things. So, and ensure that there is a desk that is pro people, not threatening them here and there, but to give them support, because compliance helps both the business but also our economy. Digital platforms providing real-time compliance alerts are very important, but also capacity building programs that should target SMEs. I remember URA used to do it, but I think they should do it in various associations, the borders, the market people, the whatever. Capacity building, helping them to understand why they should pay taxes, what are the benefits, what are the issues, among other things, but also helping them to know how they can easily do that. So that is compliance. Due to time, let's quickly rush to an important element. Now we're going to see the lenses through which an SME owner or a manager views tax, audit, and compliance. But now this slide will only talk about taxation. And here we're talking about the changes. The question that Doctor asked, the legislative changes or the tax strategy, which comes from the 10-fold growth strategy. And here we need to understand what are the most critical what are some of the things that we should do, and we need to be alive to many of these. Of course, based on the key tax proposals for the financial year that is coming in, that is 2017, and their implication, beginning with the income tax and incentives. We need to be alive to the fact that beginning with the small business exemptions, that there is a 3-year income tax exemption for qualifying businesses established by citizens after July 1st in 2025. Please mark this. You know, the law is so factual that this should have been established after July 1st, 2025, with investment capital not exceeding 500 million. 500 million, just a moment. Yes, 500 million. So what am I doing? So there is a 3-year income tax exemption for businesses that are qualifying, that fall within that category. So if you're an SME and this is passed, then that will be good news for you. The second one, of course, we can talk about, which has implications, is foreign loans. Of course, these proposals have introduced a 5% withholding tax on interest paid by resident companies on loans from non-resident entities. Because they realized that, of course, many resident companies were getting finances from non-resident entities, and they would walk scot-free. So now this has been introduced, which is a foreign loan kind of provision. So if you're an SME that is within that space, then you would know how what is the implication? What are the implications for your capital raising and also your survival as an entity. Public entertainers, of course, very many people have been complaining that these guys are making windfalls and they walk scot-free. Of course, these provisions, of course, there is a provision for 6% withholding tax on gross payments to public entertainers to capture the informal income, because they've been forming part of the huge informal sector. So now, if you're into that space, if you're a promoter, if you're whatever, you know that this is a requirement that you need to consider and has implications. Then in terms of value-added tax and electronic compliancy, the IFRIS, of course, as you know, that IFRIS has been quite embattled. The fights began when it was introduced in Tanzania. The business people tried to fight back, but now, you know, you can't fight some of these things. And if you remember, I told you that the government is allowed even to break international laws as long as it is saving a tax loss. So as you fight, you need to be alive to the realities. So here we talk about tightened IFRIS usage. Penalties for failing to use IFRIS are set at double the tax that is due, or 200,000, depending. So now that has implications. What does it mean? That you as an SME, you need to ensure that you enforce that, because there is a penalty on the same. VAT exemption threshold, of course, which is good news, that small businesses with an annual turnover of 250 million will not qualify for mandatory VAT registration. What does it mean? Because initially it was lower, now it was increased. So what does it mean? That this is the two-edged sword. It could be good because VAT would help you, because it would help the business, but at times it might make the business quite its products quite expensive. So whichever way you fall, you should know that this is the proposal for this year. Withholding exemption from VAT withholding for individuals or entities issuing e-invoices and e-receipts. So this is also a key provision within the Value-Added Tax Act that SMEs should be alive to. Excise duty and indirect taxes, fuel tax, we've heard about this, and we are all crying. Proposed increases in fuel levies, including a potential rise of 200 shillings per litre on diesel and petrol. But remember, what is inspiring this is the 10-fold growth strategy, because it has to be financed. That's why we began with that. Manufacturing and imports proposed 80% excise duty on imported and denatured spirits, a 3% on local paints, and 10% on imported paints. So for SMEs which are into that space, then they would know that that will take effect once, of course, this has been proved. Then cement and commodities, a flat excise duty of 1,000 per 50 kilogram of cement or lime, definitely making it more expensive. And 500 shillings per unit on cooking fat, which definitely affects every household. So stamp duty, proposed doubling of stamp duty on land. So for businesses which are into the do transactions in land, or even a business that is purchasing land, then definitely this will take effect. Proposed doubling of stamp duty on land and share, but also share transfers from 1.5% to 3%. So these proposals are very important because they have implications to how the SME would survive, how it would access finances, and how it would be competitive. Of course, there are also some administrative
you have
measures.
2 minutes to summarize.
Okay, that's okay. Of course, there are administrative measures, but besides that, we can also talk about from the lenses of the SME and managers. Of course, there are opportunities, tax incentives, access to credit once the SME is compliant. The key strategies that they can do. I had, of course, I talked about. I had also included that. From the investor and the capital provider's perspective, here we're talking about tax and audits as investment indicators, because some of the key things that we use when we are doing due diligence for a company that is investment ready, there are definitely tax and the audits, transparency and credibility, audited financials, which reduce information asymmetry, encouraging investments. That's why I told you about the nasty experience that the nasty story that is talked about as you heighten the risk profiles for those who would like to do business. Implications for capital raising, due diligence, investors scrutinize tax compliance records, audit records, consistency and transparency, impact of tax policy. So of course, from the lenses of the investor and the capital provider, they need, they want transparency and credibility. That is one, but also they are looking for incentives. And that's why Uganda Investment Authority offers tax holidays, import duty exemptions, custom waivers to investors who would like to go into sectors like agriculture, among others. From the lenses or from the perspective of policymaker, regulators, and tax authority, of course, they all view this from the government's direction. Now, with the 10-fold growth strategy, they are looking at this to ensure that they push for compliancy. Why? Because they should boost revenue mobilization. Because that will lead to promoting economic growth, but it will also ensure fair compliance and reducing evasion. Of course, I had provided tools and strategies that policymakers, regulators can use in this discussion. Then, of course, due to time, of course, I also talked about the challenges and opportunities, the informality, that it is estimated that our economy, more than 50% is informal. So all that space is available for government or for the taxman to do what, to mobilize. Tax evasion and avoidance is one of the challenge, among others. So as I wind up, I can talk about the global trends and where Uganda is positioned. Of course, being alive to the fact that cross-border tax cooperation is very important. And that's why projects like the OECD were put in place to ensure that there is exchange of information, and each country can help the other in getting information about people, and all that. So Uganda is part of the ESC Customs Union, which would lead to harmonizing tariffs and VAT. And the beauty with that is that for an investor who is coming from, let's say, from Europe, when they see a harmonized tax system, they'll see opportunities of investing in the region, because there are no issues, there are no surprises here and there. But also digital and environmental taxes have been introduced. Growing globally, Uganda is establishing frameworks to adapt, of course, environmental taxes progressively being developed, and also the digital, because the digital economy is massive, and that's where many businesses have gone. Resilience, strengthening audit and compliance systems to withstand economic shocks. So as tax authorities adopt advanced AI-driven analytics and the blockchain technology, SMEs should be in the business of embracing and prioritizing such disruptive technologies into their audit and compliance processes, because now that is where that's where the regulators are, because they've realized that it brings efficiency. So SMEs should definitely go in that direction. And so the role of the tax professional is drastically shifting from just being a data processor to a strategic advisor of organizations, helping them to do what we call tax planning. As long as tax planning doesn't cross into what is called aggressive tax planning. But tax planning is very important because it is what will help a business to be competitive, to thrive, but also to deliver value to its stakeholders, because you'll know how you can take advantage of the relief, and how you can definitely take advantage of the various tax provisions within the law. What are some of the key takeaways? Effective tax audit and compliance systems underpin Uganda's economic growth. They are vital for business competitiveness. They are vital for investor confidence. I've told you about the trust deficit that we have. And they are vital for economic sustainability, because we have an economy to protect. Multi-stakeholder collaboration is very important. That's why very many parties we should embrace very many parties. This will enhance revenue mobilization and investment climate, because once the businesses are really compliant and they really show it, so it will be easier for capital providers to do so. And then they'll create jobs, they'll boost our GDP, and then our economies will grow. But also embracing technology and transparency creates a sustainable and competitive economy. So my final thought is continuous learning, adaptation, and leveraging support structures are essential for all stakeholders. So Doctor, please allow me stop at that. How I wish we had time, I would have gone deeper and deeper, but thank you, and looking forward to the interaction with the audience. Thank you.
Thank you very much, Paul, for a comprehensive presentation on taxation, audit, and compliance requirements for businesses.
Welcome.
You have answered all the questions provided in your presentation: legislation changes and tax strategy, audit preparedness and risk management, technology, compliance, and digital transformation, international trade, international tax, trade, and cross-border issues, and then the future needs and changes in tax administration. We have learned that compliance is not a cost, but it's an investment, and audit will always provide assurance. Trust is good, but verification is better. And investors are looking at integrity, harmonized tax regime, and also accountability in how we do things. Ladies and gentlemen, aside the time schedule to give us a parting thought. What should a business owner, entrepreneur do differently tomorrow after this session, after this comprehensive presentation that captured many issues?
Thank you, Doctor. Apologies if I was very fast because I saw that the time was not really on my side, but simply put, when I began with the simple fact that when you understand the criticality of taxation to government, you would know that you don't have many options. Because I even told you that at tax school, we are told that the government is even allowed to break international laws as long as it is saving a tax loss. What does that mean? That the only way how you can survive is by compliance. That is one. Two, please get professional tax advisory. Why? Because as I told you, the way how the tax code is made, it has very many reliefs. It has very many allowances, by the way. That's why even our tax system is not based on profit. It is based on chargeable income. But chargeable income is that income after the deductions. And the deductions are provided for within the tax law. There are those for SMEs which are operating in certain geography outside the CBD. There are those which are provided for businesses which are operating in a certain sector. There are those which are provided for in terms of the employment income tax, in terms of, so there are quite many. It would be quite hard for you to understand them because tax is a specialized area. Not even lawyers don't understand it. Even lawyers have to go to the tax school to understand it. Why? Because it is so dynamic. Every year it changes. So getting a tax advisor is very critical for your survival. But compliance is very important, and ensuring that you do the right thing. Why? Because for me, as an investment banker, I view it not only for competitiveness, but it will go a long way in helping to reduce your cost of capital. Because investors and capital providers, once they realize that your risk profiles are lower, they have no reason why they will definitely of course, charging you high. So in short, doing it deliberately, intentionally, will help you not only to survive, but to access very many various avenues of capital raising, getting very many partners and investors, but also taking advantage of many opportunities that come with that are embedded within the tax law, but also elsewhere. Because even the NGOs and whatever which are giving some kind of grant or which are giving guarantees, they're looking for those who are compliant. Simply put, the best thing that you can do for yourself and your business is compliance. That is the bottom line. Thank you.
Thank you very much, Paul. This brings us now to an end. And I want to thank everybody for your time, for your contributions, for your questions, and for the feedback. Join us again on the 27th of May. For now, the session comes to an end. Thank you very much, everyone. From me to you, taxation, audit, and compliance requirements for businesses comes to a close. Bye-bye. God bless.